I'm Elizabeth Dawson, and we have Tom Welch here. He's our expert from the SBA, but he works with Neighborhood National Bank and has been doing a lot of these Paycheck Protection Program loans, and he's going to be our expert witness, if you will, today about how to answer and navigate through this the best possible way. You also see Tammy DeWitt, her name here as well, and she is a co-worker of Tom's, and she's going to help navigate in the chat area, as well as Katie Steck, who is part of my organization, and she'll also be navigating in the chat. So please, if you have questions, don't worry whatsoever about asking them. We have a list of questions that have come to us prior to the event tonight. So this is our 4th fireside chat, and today's seems to be a very impactful message, and like myself, I have questions as well, and I'm sure that Tom is going to be able to give us a lot of clarity on this, but we're going to try and pack as much information into the next hour and be hopeful that we can answer even some one-on-one questions. But if you have intimate questions that are particularly about your business, which I know you do, we will be happy to set up some times that we can speak with you. And again, that's why the whole team is here. For those of you who know me, that's wonderful. But for those of you who don't, my name is Elizabeth Dawson, and I am the CEO and owner of Copia Wealth Management and Insurance Services and Copia Wealth Management Advisors in Mission Valley. And I'm a comprehensive financial advisor. I'm also a fiduciary, which that means we have a higher responsibility to the consumer based on their goals. So one of the facts that I like to bring up when we work with our business owner clients is that the number one thing that they're always trying to mitigate is taxes. So tax mitigation strategies are what we would specialize in for our business owner clients, and then transferring down to the personal finances of our business owner clients about how to run their personal finances for profit, just like they're trying to run their business. Now, alongside with this, we have Tom Welch, which I'm going to let him definitely introduce himself to you. And this is going to be a powerful message that we're going to bring the Paycheck Protection Program basically up in front and center as soon as it's available, hot off the press in the last couple of days. And it's something that is constantly changing. So without further ado, thank you so much for being on the Fireside Chat today, Mr. Tom Welch.
Well, welcome everybody. We're glad to have you here tonight. I thought I would go over a couple of things about changes that have occurred in the last couple of days, and then Elizabeth and I can kind of step through the questions. I have been in banking for 40 years. I just finished my 40th year in December, and I have been doing SBA lending for about 30 years. And it's something that I love, and it's very, dear to my heart, and I'm very happy to be able to help people so their businesses can thrive and their families can, live and enjoy life. So this PPP thing has been quite a challenge for all of us because it continues to change every day. I have a binder that's literally, 3 inches thick of things that I've had to read and keep on top of, and I hate to tell any of you anything specifically, through this whole process because it just kept changing. I think we're getting to the finalized part for the forgiveness. So that's why I'm kind of we're getting ready to roll our forgiveness out at our bank. One thing I would say is don't rush to have to do the forgiveness. You have 8 weeks from the date your loan was dispersed, or now under the new rules, you have up to 24 weeks. So you will have to decide whether you want 8 weeks or 24 weeks. So as long as your loan closed before June the 5th, you have that option. If you closed on or if your loan was approved after on June the 5th or after, you only have 24 weeks. And I think it's better to kind of wait before you do it because we don't know if there's going to be more changes still, and you have plenty of time before this is all, before you're required to even do the forgiveness. So the first thing that transpired is any loan that was made on June 5th or after, the maturity dates of those loans have been extended out to 5 years. So most people's loans, the maturity date is 2 years. The new ones are 5. You can ask for, by mutual agreement, you can ask the bank to extend it. I can tell you at our bank, we are not going to be able to offer that because these loans only are at 1% and they don't even cover our costs to have them. So we're very highly encouraged that everybody's going to get their loan forgiven and they're not going to have to really use the loan feature of it. You may know too that the breakdown has changed. So when we started, it was 75% for payroll, 25% for non-payroll expenses. Now that's been changed, and now you can have 60% for payroll and 40% for non-payroll expenses. What I will tell you is please, 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 you have to have at least 60% for the payroll. If you don't meet that threshold, that portion that's below 60% will not get forgiven. So it's important that you focus on the payroll portion first and then go over to the non-payroll part. The PPP loan does expire program. It expires on June 30th. So the SBA is closing the program out. As of last week, there was still $128 billion left in the program to be used. I'm sure those funds will be deployed some other way. But I do want to mention too that the economic disaster recovery loan, if you did not receive one of those, and I told you that the funds were had been exhausted, they have been renewed, and the SBA opened that program back up again late last week. So if you didn't get one, those loans did not come from the bank. They actually came directly from the SBA. So you have to go to their website.
And Tom, I know we were talking earlier today and you said that there's some coordination with the EIDL loan with the PPP program, but it's a coordination of simplicity. So when we're talking about the 60% for payroll purposes for the PPP loan, do you want to go over some of those requirements? Because we've had many questions from people that have sent them in. You know, what kind of retirement program qualifies as paycheck protection, 60% of payroll? What are some of those parameters that people need to have organized that they can use?
Well, I mean, you know, you submitted an application that had your payroll expenses. Most people had payroll companies that did their payroll reports for them. So obviously anybody that was on salary, if you're on commission, you know, their retirement, if you're paying, you know, contributing towards your employees' retirement account, that counted. Their portion does not count, of course, but the portion that the employer participated in, and some of the taxes. The federal taxes did not use those to qualify. And then, you know, the non-payroll expenses is your rent, your interest payments on any loans that you had. If you have a lease, the lease also qualifies under the rent portion of that. And as well as, how did I forget here? There's one other item that counts. Oh, the health benefits as well too. Yeah.
Right.
So
I know now it's about organizing those pieces about what you've paid through the monies that you used just specifically for the Paycheck Protection Program. So I know that it was originally designed for 8 weeks. You had to do your loan forgiveness application within that, when that 8 weeks was over. But I know what you're saying now because of this extension that we have up to 24 weeks to basically do this filing from the origination date. Just, I want to make sure I'm accurate with this. So from the date that your loan was funded, that you have up to 24 weeks to do the loan forgiveness program. Is that correct?
No, actually what's happening is now instead of having 8 weeks to spend the money, you have 24 weeks to spend the money.
Okay.
And then you have until, this is going to freak everybody out, but you have until October of next year, the 21st, to apply for your forgiveness.
Oh my goodness, that is completely different. That is completely different. So you have up to 24 weeks to spend the money, which I think everyone probably even on this call has done, you know, feverishly how to spend that money as fast as they could. But now we have 24 weeks to spend the money from the origination date of our loan. And then we have until October of 2021 to actually do the loan forgiveness application with the government.
Right, but you don't want to wait to the last minute because they will, after that point, you have to start making payments on your loan. So, and if you choose the 24 weeks, your deferral period gets pushed out too. So
Okay.
the length of the deferment, because now the deferral period is approximately 16 months. Because it's going to take, so, if you want to walk a little bit through the forgiveness process.
I think that would be good, because I think even that breakdown of 60% for payroll is good, but the non-payroll, are you saying the only categories are going to be like a mortgage interest, a lease or rent payment? You mentioned something that I hadn't heard or read, which was interest on any kind of business loans. Business loans doesn't have to be a commercial mortgage. It can be a business loan.
Right. Yeah.
Okay. Because I think that's a new clear point.
Yeah, and your utilities too.
And utilities, right.
Yeah.
Now, one person asked me about property taxes. Could property taxes be part of that 40%?
Yeah.
Okay.
No. Yeah.
So what if someone had done that? How would they would they just have to pay that money back to the government, or would it be something?
Yeah, I would either try to find another place to use it, or you're either going to have to end up, paying the whole thing back at once or go back to your payment plan. Because most of the people that are on just so you understand this too, right now, if you have a 2-year loan, and I probably should have clarified this, the 16-month deferral is for the people that are on the 5-year plan. The people that are on the 24-month plan, where it was a 2-year loan, there's no payments for the first 6 months. And if you do have money that is not forgiven, then your payment plan will start and it will only be 18 months. So you have to pay it back fairly quickly. But I'm really not anticipating that people are going to have, large amounts that they are going to have to pay back. So, and we're trying to get everybody, 100% forgiven. So the way that the process will, do you mind, since a lot of people, are from maybe, part of my clients are here online too, I'll explain how we're going to do it. And then, it will be similar, for everybody else. We are going to use a forgiveness portal where you'll actually be able to, we will create a link, and we're going to send all of our customers a link to this portal, and it will have populated a majority of your information from when you actually applied for the original loan. And it's going to ask you some questions, because you're going to have to decide once again on this application whether you're going to do the 8-week forgiveness or the 24-week forgiveness. So by answering some of these questions, it will determine which form you're going to have to fill out too. Because now there's 2 applications. There is an easy form, and then there's just the general application for the loan. The easy form, it has like 3 questions that you'll have to answer in order to be eligible. So anybody who is self-employed or an independent contractor, or you're a sole proprietor and you didn't have any employees, you're eligible to use the easy form. And the easy form is only 3 pages long. If you did not reduce the annual salaries or the hourly wages of an employee by more than 25% during the covered period, then you're going to be eligible to use the easy form. And then this one is a little bit more tricky. If you did not reduce the salaries by more than 25% or your hourly wages, and you were unable to operate during the covered period, so like if you were restricted from having your business open because one of the federal agencies had said you have to close, you're not an essential business, then you will qualify under this to actually use the easy form.
So less documentation with the easy form, but you have to qualify under those requirements.
Yeah, you have to be able, on the actual application, there's instructions, and you have to be able to check one of those boxes before you can move forward on it.
Well, and I know people are going to have more and more questions about their unique situation, so we'll take those questions if we have enough time at the end. But if not, we can always do a one-off and create appointments with you or myself, Tom, and we can try and help people out. Because one of the questions from Ryan and Jennifer Ogden had said, do you have a forgiveness app ready yet? Well, it sounds like it's coming, at least through Neighborhood National Bank, but I do know that they also have applications on SBA as well. So, but I do like the idea, Tom, that you're saying maybe wait a little bit before you jump the gun to actually do your forgiveness application, because so many rules are changing every day.
And you're not required. It's just the way the law was written. It said that I mean, technically, you could apply before you used all of your money. That wouldn't be very smart, but you could. You can apply. You can apply at the right after the 8-week period, or you've got a long period of time, you know, before you have to just jump on it. So I'm going to recommend to my clients to wait. The applications are available. The reason why we haven't released anything, because our system's going to complete the forms for you. So you're gonna answer the questions, and it's automatically gonna populate the form. And then when you're done, it's gonna submit it to us. And what happens is the bank, we have 60 days to review your application and either approve it or decline it.
Okay.
And then from that point, let's say that we approve it, then we send it to the SBA, and the SBA has 90 days to review it.
Okay.
The reason why, this is the second reason why we haven't released everything out yet, is that SBA has not provided us with the guidance of how they want us to send your information to them. So even if you send everything and we approve it, it's going to be sitting in a box, you know, and I don't want it just sitting there and going nowhere. Yeah.
Well, the interesting thing, when you and I talked about this earlier, you said that the SBA only has about 800 employees, and for the Paycheck Protection Program, they actually took in over 5 million applications. Is that right?
Yeah. So, but there were a lot of banks that participated,
right.
you know, in the
Without
program,
the banks, we couldn't have done this.
No,
do we think that the banks might just have the approval, power at that point, because there's not enough people in the SBA to actually go through and fine comb it?
No, they're not going to do that. Yeah.
So we have to have our patience hat on with this process, a minimum of 5 months.
A minimum of 5 months. Yeah. Okay. And it could be longer. And I think that's where the deferral part comes into. If I remember right, they're saying that they're going to, originally the way it was written, you would have had to start making interest payments in the 7th month. But now the payments aren't due until they actually approve or decline your request. So, and they're going to pay all of your interest.
Are you saying that if your application's in process, then you're not going to have to pay the payment until they're approved?
Yeah, you're not going to be paying the payment. That's how I understand it. Yeah,
that's good to know. I think that's actually a big plus, because what do you know? What do you even know what you're making a payment on?
Yeah, we don't know what the amount is. I mean, the bank is going to determine whether it's going to get all forgiven, or a portion may not get forgiven, or it's totally declined. And I was telling you earlier today, Tammy and I've had some crazy questions about people asking us, can I go out and buy a gas station? Can I pay down high interest loans, even with the PPP funds? And we're like, no, don't do that.
Yeah.
So, because this was supposed to help, keep people employed and be able to keep the doors open of your business.
Well, I mean, that's not necessarily tonight's subject, but I think it's worth mentioning, because the economic impact disaster loans, which have now all of a sudden come on the map, people really applied for those back in March of this year, didn't hear anything for a few months, and then all of a sudden they got this email saying they're approved. And now there's more money that's available to actually apply over there too. So are there specific guidelines that you know about, Tom, about how to use that money or how not to use that money, because it's supposed to help you with the economic impact of what your business is going through?
Well, I mean, like I said, it was really to provide working capital for your business, and to be able to keep the doors open. I mean, those loans are 30-year loans. You don't have to make a payment for 12 months. So you'll be paying them back over, 29 years. I would just say, like I said, I would be reasonable about just things that you have to use it for in your everyday operation. Don't do things like, going out and using it for money for a down payment, to buy a building or something like that. Because I do not think that would be eligible. And if they ever called the loan, you can guarantee that these loans are all going to be scrutinized, by the federal government to make sure that the people that received them should have gotten them and that they were used for the right purpose.
Right.
Yeah. So.
Well, I know that there's some specific questions from some people that actually sent them in early, and I know that they're probably in my list here, but I think that the best thing I can maybe start to ask for, and I'll pull some more up, is from an organizational standpoint, because you and I've had these conversations, because yes, I am a recipient of a PPP loan, and I wanted to make sure that I had, dotted every I and crossed every T. So from a documentation standpoint, I guess one of the big questions is that, let's say you went through your Paycheck Protection Program loan, but you still have payroll within that 8 weeks and you're using other monies to pay for that. How do you maybe qualify for your payroll expense to cover, even though it was more than maybe what you received for that time period? Can that actually be documented in such a way, or is it really those dollars specifically, that's the only documentation you can use for payroll?
Well, like you're saying, like maybe there was a period that wasn't covered, like you.
Well, maybe there wasn't enough money to cover all the payroll.
So, I mean, then you're only going to submit what you actually expensed against the PPP
against the
program.
actual money of the Paycheck Protection Program.
Yeah.
Okay.
I think there might be one little thing that you should know about. There's an alternative payroll period too. So at the end, they realized originally it was black and white. It was, you have 8 weeks to spend the money, that's it, the end. And then they started realizing that some people's payroll was going to fall outside of that 8 weeks by 4 days, 5 days, So what they did was they actually gave us an alternate payroll period. So that last payroll period, if it falls, after your 8 week period, you can choose alternate payroll, and you'll be able to, that will be eligible to be considered as part of your forgiveness. There
was another question from Marianne Myers, and I'm going to just kind of read it to her. I'm hoping Marianne's listening here, but it says, this is an interesting thing. So her first question is, what are the guidelines if employees' hours are reduced by more than 25%? Does the employer have until 12/31/2020 to restore the employee's hours, or does it remain at 6/30/2020 in order to be eligible for loan forgiveness, similarly to restoring the same number of full-time employees?
So that just got changed in the last week, in the last final ruling that we came out, and you have until December 31st to restore their hours.
Okay.
So yeah, and so that any reference to 6/30 other than the program ending has all been pushed out to 12/31.
Okay. In addition to that, what if you were not able to bring back every employee, but they're still furloughed?
So you weren't able to bring them back.
So let's say you had staff of employees, and maybe there's 1 or 2 employees that you furloughed, but you're not able to bring them back. How does the loan forgiveness portion work for that?
Well, were you paying them?
Paying them on that time?
Yeah. So
I would assume no. If they're furloughed, they're on unemployment.
Yeah.
They have benefits.
Oh, and you want to just be able to meet, maybe you didn't use all your payroll money in the PPP program, and then you restore them before the 12/31. Would you be able to? I think there is a carve out, for that as well.
Okay.
That will be able to help you get back up to the number of employees that you need to have. One thing that I did learn today too, when I was kind of reviewing all these big changes.
Mm-hmm.
Let's say that you did cut your salary of an employee. So just for an example, let's say that they made $1,000 a week. You cut their salary by $300.
Mm-hmm.
So during that 8-week period, they would have had like about what will be eligible. They're still going to let you keep 25% of the salary that they would have made, and you won't be penalized for that.
Okay.
So you're only going to, so like if you cut their salary by $300, you're only going to be penalized by $50 a week for what you cut.
And I read something today too about full-time employees versus part-time employees. So there's a different treatment for those as well. Do you know much about that, Tom?
You have to be able to, someone has to be working 30 hours or more to be counted as full-time.
Okay.
And then if you had 2 part-times and they were working 20 hours a week, then you would add them together to get a full-time equivalent.
Got it. I'm hoping that this makes sense to a lot of people, because we've gotten so many questions that I'm trying to get to them in kind of a consolidated way. I have another question here from Richard Brown, and There's a few here, and it says basically, are payroll taxes due on those payments for payroll? I would imagine so. But I know that there's some rules that are going to be changing here too, that they're starting to ignite, that there might be a payroll tax forgiveness or highlight, something like this.
They're actually, with this, one of these new rules, they're actually going to be deferred. So
Okay.
you're not going to have to pay them immediately. It wasn't, you know, we probably have to dig down deeper, and I'm sure your payroll service or, you know, your accountant would know. But what I did read is that they are going to defer them.
Okay.
They're not going to be required to be paid immediately.
Well, I think that's actually a good, good to know, because not everybody is aware. Another question that Richard had too is, are SEP and our IRA contributions forgivable expenses? From what I know, that's part of the payroll portion, but I guess it just depends if they had qualified for it when they did the loan application. Is that accurate to say?
Yeah, they would have had to have included it in their application when they first sent it to us. So we would have included it in your dollar amount. So, but I believe if you were paying the IRA portion for yourself as a business owner, then that will be eligible. So I don't think that's the only way that you'd be making an IRA contribution. All the rest would have been 401k contributions, right? Or SEP contributions. Yeah.
Right. So I know that there's more questions out there, and Tom, do you want to, is there any other kind of, groundbreaking news that people need to know? This is something that is in your wheelhouse every day, but not for the average business owner or consumer. So we're not necessarily sure how to navigate through this the best way possible. So are there any things that we really need to be aware of, more knowledgeable of?
Well, one thing that it is new too, that kind of caught us off guard a little bit, is for sole proprietors. So if on your Schedule C, if you had an employee, you're actually capped. So for yourself, before, if you were a sole proprietor and you have no employees, we use the net income of the company to be able to come up with what we are going to be able to give you in a loan amount. So you got, we divided your net income for 2019 by 12, and then multiplied it by 2.5, and that was your loan amount. However, now if they were worried that you might lay somebody off and then try to get the full amount. So if you are a sole proprietor and you had an employee, each of you are going to be limited, and you're under the 8-week program, you're going to be limited to $15,840, I think it is, if I remember right. I have to look at my notes. And then if you choose the 24 weeks, you're going to be limited to about 20,800, I think it was. Yeah, so it's 15,385 and 20,833. And some of those calculations we didn't do that way because that was not ever explained to us at the beginning. So it's an important thing to think about if you are a sole proprietor.
And I don't know how many of the attendees worked with you to get their PPP loan done, or if they worked with a different bank. What would you suggest for them to be prepared? Because again, everybody's going to have questions.
Well, go ahead.
No, I'm just wondering, like, for people to how to navigate through this to do it right, so they do it right the first time, because you can't go and correct a mistake when you actually enter in this application process.
Right. We're gonna, we are gonna have to come back to you and re-verify if something didn't look quite right from what you sent. We don't want to finalize it, because once we finalize it, we can't undo it. It's
right.
It's going to be sent to the SBA, and it's gone and it's out of our hands. What I would say, and I've been telling all of my clients, is like, make sure that you save all the documentation, because in the application, it does tell you the types of documentation that you're going to have to include for each type of item that you want reimbursed. So like if you want utility bills reimbursed, you're going to have to either give us a bank statement and the utility bill for that month to show that it actually got expensed and what it was. And they became a little bit more gracious too about the time period. So let's say that you are in a 24-week period, and you're gonna end in November, say November 15th, but your electric bill runs for a 30-day period. You're gonna be able to take the expense all the way up to the 15th. You won't be able to take it to November 30th, but you will be able to recapture part of that. The payroll, you're going to have to give us your payroll reports. If you had a payroll company, do it. And the payroll, in order for it to count, it had the employee had to have earned the money. And so if you have a payroll service and you do an ACH, and we see it, we'd have to have your bank statement to show that the ACH, cleared your account. Or if you have you might have some of our clients, what they did is they opened an account at our bank and they used that account to pay all their payroll from. So they'd have a clean.
I think that was one of the best recommendations you could give me, and not everyone on this call had a private banker like you or that kind of relationship. So that was something to keep it clear. That's why, if you commingle it with other monies, you might not have had the same clarity on how payroll was spent from those dollars specifically, or if your payroll became more, or, your rent or whatever it might be.
Right. And I will say too, you mentioned about the mortgage payment. You can only write off the interest portion. You can't write off the principal portion.
Right.
So that's why I said, even on the other loans that you had, we can only take off the interest portion, even on any loan that you have.
But if there's a lease agreement or there's a lease payment for rent, that's another piece that you had talked about.
Yes. So they're asking for us to obtain a copy of the lease along with, or you might have a billing statement, and then again, the check that showed that you actually paid your rent. So, or if you had your mortgage payment, you're going to give us your mortgage payment statement and the check that cleared.
So just to clarify, because somebody was asking, you need a statement and the canceled check or proof that payment was made.
Yes, you'll need both pieces, because you have to show the statement's going to show how much it was, and the check's going to show how much you wrote it for. So, yeah, the SBA is very, very picky about stuff like that, and you have to approve up everything to the dime. So we will have to, we'll be forced to do it. And so if we when we're going through it, we find a mistake, we are going to come back to you and go, hey, how did you come to this? We need help figuring out how you got to it. And you may have to find some other expenses that are eligible, but I think most people, for the most part, would have pushed it through payroll. But I know there's some people that couldn't hire everybody back, and they were, may not be able to have used all the money.
Speaking of that, there's a couple questions regarding hiring and letting people go. One is, if you had to, if someone quit after the 8 weeks, do they have to be replaced?
I think you're going to fall under this.
Question.
Yeah, I think you're going to fall under the safe harbor because they actually left. They would like for you to have replaced them, but under the safe harbor rule, because they left, they're not going to penalize you for it.
Okay.
You will have to show the documentation, that hopefully you documented it well, that they gave their notice and they left your employment. Because from what I can read in the instructions, we're going to have that kind of detail. And the same thing is, if you had an employee that you actually called them back to work, you're going to have to be able to show that you gave them an offer letter, that they refused the offer, and it even goes as far as that you notified Social Security unemployment that they refused the offer. So that's a little sticky wicket right there.
That is.
What about how hiring an additional person falls under that? If you maybe were at full capacity, but you hired additional help, does that qualify as your payroll expenses?
I believe that it would be, and you're going to show that you actually have more employees. So the application's going to have how many employees you had when you applied, and how many employees you have when you're applying for forgiveness. So they're going to, check your full-time equivalents. And so I'm sure if you had extra money, built into it, I don't know that it's really going to work that way, because the whole application was all based on payroll. It was never based on what your rent was and what your utilities were and everything else. So the way you qualified for the loan amount was basically based on your payroll. But maybe if you didn't bring everybody back, you're going to be able to use some of that money for those other items. But yeah, could the payroll be more than 60%? Yes, it could be. So, and that would be a safer place to be than being at 59%.
Right.
So Tom, I have a question because I think this goes to now the extension of using the money for 24 weeks. Well, if we thought, and what we were qualified on for was for 8 weeks, what if we still need money and there is all this money that's still left over, it's available till the 30th of this month, can you reapply for more money?
Nope, you can only have one PPP loan. And
Okay,
that's
so
it.
you can't, I guess, amend it.
No,
Okay,
no,
that was a
yeah.
question someone asked too. Okay.
I mean, originally when we first started, we were amending, but what transpired, because they didn't even have clarity about whether you had to disperse the whole amount all at once or not. And so some loans, you know, we were able to increase. We might have made a mistake in the calculation. The borrower forgot to tell us, oh, by the way, I have a retirement contribution too, and I didn't give that to you. So
Yeah.
early on, we amended them, but we couldn't do it after the fact. So now,
Okay.
once they're
Katie,
dispersed,
are
you're
there
done.
more questions, Katie? Or Tammy?
There are a couple. I know Tammy's been answering a couple in the Q&A. Tammy, was there any that you thought would be good for the whole group?
I have to unmute myself, sorry.
No problem.
You know, there's quite a few really good ones. You kind of read a couple of them that came over, but you answered the other one about whether or not you could get another PPP loan if there's another wave, and of course that was a no. Someone wanted to confirm the expenses that you use for the PPP loan are not tax deductible and they should not hit your P&L statement. I had a question that was asking about a sole proprietorship. And they were under the impression they could not apply for a PPP loan until they were on their last dollar. Do you want to kind of explain how that process went?
Yeah, that wasn't really true. I mean, basically, you had to provide us with your Schedule C from your tax return or a financial statement, because some people didn't have their tax returns done at that point. And what we did is we took whatever you reported as net income. So whoever had led you that way, I'm sorry, because that's not true. But you still have time to apply, because you have till the 30th to apply. And there are a couple of banks that we are aware of that are still taking applications. They're only taking them online. So you have to go online to their website and apply for it. Because we're not taking any additional PPP loans. We stopped on June the 5th.
But you do know of a couple of banks that are still doing that, right, Tom?
Yeah. So if they want to, maybe Tammy, you could respond to them, you know, with a bank or two that you remember that could help them.
Sure.
And Tom, I want to go back to this easy form. Do you think we can spend a second on that? Because I think it could be helpful for us, and I'll just share my screen. And by doing that, I think it would be, you know, I just think we can maybe go over this a little bit slower for more people to understand. So here's the form, and this is something that we have available that we can send out to whomever would like to see it. But just from a qualification standpoint, because what's different here is that a lot of business owners, especially in Southern California, are, you know, S corporation, right? So I know that the different requirements to basically do the easy form, which is a smaller application for forgiveness form. The first piece, it says self-employed, individual, independent contractor, or sole proprietor who had no employees. So that would be one, but that kind of, you know, negates quite a few people from this, correct?
Right.
And then it goes into the borrower did not reduce any annual salary or hourly wages of any employees by more than 25%. I think this is where it goes back to Mary Ann's question.
Yeah.
Would this be something where if you could elaborate on that, and I know these two pieces, if you could elaborate on those two pieces just to say, okay, this is how you would qualify for that.
So, I mean, it's pretty straightforward in that it says right there that you could not have reduced their salaries by more than 25%. And we were talking, and here's where they have that alternative payroll covered period. So you can either go with the regular covered period or that alternative to capture a payroll that's outside of there. So that one, and then the next one is, then the bar did not reduce the number of employees or the average paid hours of employees between that time frame. I probably have to look at my application because it's a little bit covered.
Because I know that some people, I'm sure on this call, and I know we've had to do it too, which we didn't want to, furloughed 2 part-time employees in our firm. So I don't know if this would even allow for easy, compilation of this.
Oh, in your case, like you furloughed 2 people and you counted them as one.
Right.
Because they
I'm just using myself as an example. So I don't know if I would even fall into any one of these categories. So I'd like to be more devil's advocate to say, okay, because people are asking these questions, they sent in their questions prior, they, sent them during. So their concern is, if there's a possibility that someone can do an easy form and maybe have that same kind of situation.
Yeah, and it's probably, I only see it as, as what it says there. But I don't know about, like, if you actually didn't hire somebody back, because you go down below.
Yeah.
If the bar was unable to hire similarly qualified employees for unfilled positions on or before, just see that you're back to the December 31st.
Okay.
So if you're going to bring people back again before December 31st, that's why you probably don't want to apply for your forgiveness immediately, because you got time to bring people back. Then you might fall back under this. If you start picking business up, and that's how I'm interpreting it.
Okay.
And then the bottom one is more about
what you have to provide.
Well, no, that third box. That's the one where they were non-essential and they were required to close down by the Secretary of the Health, the Human Services, Director of Center of CDC. But you have to be able, but you have to be able to provide the documentation to show that you were required to shut down.
I mean, I'm hoping that is helpful to the group, just because I think that if there's an easy way to do this complicated thing, it would be great, but maybe we don't have that option.
You may not, but there is some in the application. If anybody wants the application, you are more than welcome to reach out to us, and we're happy, to send it to you. Like I said, for my clients, you're going to be able, we can send it to you, but you're going to be able to, it's going to fill it out for you. Basically, you're going to put the information in, and we're going to verify it. But there is a lot of detail in here, like what we were talking about tonight. There's a lot. And then if someone is brave enough and they want to see the actual law and how it's written out and what I have to review,
It's
I'm
quite
more
a big,
than happy.
it's quite a big law. I mean, that's why they call those things red tape. I see another question here from Ryan and Jennifer, and it says, what about workman's compensation? Since that's an employer expense, is that something that could fit into either payroll or into the 40%?
Is your workman's comp paid through salary, or is it paid through a third
usually
party?
Through a salary or a payroll company, but you have to pay it in, I mean, it just depends. Some people will pay it monthly and some people will pay it once a year.
Yeah, if it was paid through payroll, then we can include it, because we did include workman's comp in a lot of people's applications. We added it back in when we saw it. So,
well, now is your chance, everybody. Ask the questions that you're dying to ask, because that's what we're here for. I know that there is one attendee here that literally didn't get the Paycheck Protection Program loan, sole proprietor type of situation. So she is someone that maybe we can get her some information about some banks that still have money. Katie, you know who that is, and she's on the call. So I just want to make sure we get that information to her. And then in addition, if we are in a situation where we have certain questions, and I know that Tom, you are so incredibly busy, especially with even doing SBA loans for purchases of properties and things of this nature, or refinances, which I know we're a client of that with you too. When are you going to be able to ramp that up and even maybe answer some of these attendees' questions about that?
I mean, about these PPP issues.
Well, PPP issues, but then really running their business. People want to
Well,
buy property. It's an opportunity position at this time.
Yeah, we are geared back up to do that now, because for the most part, I think we've gotten the majority of the guidance that we're going to need, to move forward. I think there's probably going to be some further clarification, that comes out, but overall, I think we're in a pretty strong position. Like I said, probably next week, we're probably going to start releasing the links to our portal to like the first to the people who got their loans in April.
Okay.
Yeah, I'm not going to release them all at once, but like I said, don't rush. And then Tammy and I have already started reaching out, because people are starting to rev their business back up. Revenues are starting to pick back up for most of our clients. So, I mean, Tammy and I, we just finished, one of our clients just bought a building. We have another client just refinancing a bunch of debt. So we are now getting back into the process of processing loans. So, if you have financing needs, we're happy to take a look at them. Our bank we're willing to move forward and start lending. I mean, it has to make sense. We're not doing any projection-based loans. So if someone's a total startup, not in this economy right now, it has to make sense, and your business has to be able to show that you can repay the loan like at any time. And this is going to be a difficult time because some people's doors were closed down.
Sure.
So, yeah.
Well, with having a paycheck protection program loan, will that disqualify anybody from?
No. So what we're doing now is, to satisfy the regulators, what we did is anybody who had a PPP loan that's applying right now, they need to give us their PPP spreadsheet that they had to show how much money they have spent and how they spent it. And then we're going to look at it, review it, and make a determination that, all of yours is going to be forgiven. So you won't have any debt service against the PPP loan, or oops, there's a little blip here, and maybe your payment's going to be $500 a month for the next 18 months. And we'd have to include that in the debt service.
Okay. I think that's incredibly important to know, because right now, again, opportunity time to ask questions, and there's going to be more questions. What if someone wants a private banking experience with you, Tom, because this is just so overwhelming? Is that something you're entertaining right now to help with, you and Tammy and your team?
We are. I mean, now the majority of our PPP people, our first wave was our clients, and the second wave were all non-clients. So we were opening a lot of accounts, and it's for our small bank, it was overwhelming. We're back on board now, where there's more normalcy. And yes, we're looking to build those relationships with people that we did do PPP loans for that weren't clients of ours, and as well as expanding, business with people that we already had as clients. So, and we had a lot of referrals from everybody. Thank you so much. It was, we really appreciate the support that you guys provided to us. Thank you to Elizabeth's team. You guys sent us a bunch of clients, and we're very grateful to you for that.
Well, it's all about, sending people to the right people to make sure that things get taken care of and get done the right way first versus, a mistake later, right?
Yeah, it was a big challenge though. Many late hours.
I know, we talked at 10, 11 o'clock at night sometimes. I'm like, oh my gosh, Tom.
Very scary.
So what I want to say to this group is, if you have a question, by all means, please ask right now. If not, you can.
I still have several questions.
Oh, you do, Katie? Oh, I'm so sorry. I thought we were done, because I'm looking at the chats here and I don't see them. So, okay, go for it, Katie. Let's take advantage of this time.
Okay, I think we might have touched on this, but I want to make sure Jay gets his question answered. He asked, he received PPP funding on April 20th, may need to avail ourselves of the safe harbor of the last 2 weeks of 2020 to get the required number of FTEs for maximum forgiveness if we don't fall under the new easy application. There seems to be some incongruity between the 24 weeks and when I believe it says somewhere that I need to apply for forgiveness, and the fact that I need the safe harbor for the last 2 weeks of the year to get full forgiveness. How do I reconcile this?
So I think, Jay, now that we have the ability to go all the way till the end of the year, till December 31st, from the guidance that I just received in the last couple of days. So I think that you'll be able to restore as long as you restore those employees before that time period, you won't be able, to once again to rush to submit your application for forgiveness. So you may have to wait until you get those employees restored before you submit it, is what I'm anticipating that we're going to have to do for you to make it work.
Okay, thank you. I think we also talked about this a little bit, but the question was, are those payments based on 2019 net income? I know you said for sole proprietors, the amount was based on net income. How did the income?
So are they talking about the loan amount? How the loan amount was? Can you provide me with a little bit more clarification? Sorry.
Yeah, well, hold on, let me see if I can ask the person who asked, because that's all the question says. It's a follow to our payroll payments made for net or gross income for a sole proprietor, and then I guess maybe it was in terms of a sole proprietor. Are those payments based on 2019 net income?
And I'm sorry. Yeah, Tammy, do you want to? I couldn't hear the question completely.
Okay, I'm sorry. Can you hear me okay?
Yeah, I can hear you. Yeah.
Okay. So it was a follow-up to the first question this person asked was, are payroll payments made for net or gross income for an 8 or 24-week period for a sole proprietor? I know you discussed that, yes, it was based on net income, correct?
Right, yeah.
Okay. So the follow-up was, are those payments based on I think they're asking, is it based on the 2019 net income versus?
Yes, it was based on the 2019 income.
And so that was for the Paycheck Protection Program loan itself.
Right.
But your expenses this year could be higher.
Right, they could be. And you may have made less money, right now in that 8-week period or the 24-week period than what you made last year. So there is going to be, there's going to be some issues that could arise. I'm anticipating that we could have some issues there.
And I think, Tom, you're gonna say the same thing I'm going to say is do your best. Yeah. Document as best as you can, and pray that it all works out. And this is going to be a learning process day by day for each and every one of us as we go through it. And
you're probably going to, in a sole proprietorship like that, you're probably going to have to really rely on the 40% of all the other expenses that you incurred. So we had a lot of questions from people that were just independent contractors or individual, because they don't typically, when you're a sole proprietor, you don't really take a paycheck, per se, but at the end of the year, what the net income is really what you earned as salary when you're a sole proprietor. So that was a hard concept, because people are like, well, do I write a check to myself, or, what should I do? So I think you could write a check to yourself if you so chose, or what I'm telling people now is, you're going to give us your income statement for that 8-week period, and we're going to look at what your, net income was and
right.
your expenses.
I know one of our clients is on today too, and she's a sole proprietor. Her name's Kathleen, and I know that these have been questions that she's had too with her program.
Yeah.
Sorry, go ahead, Tammy.
Can you talk about, we had one that talked about they received $10,000 on the EIDL loan. Is that forgivable as a grant? And do you know that if we have to apply for forgiveness also?
No, you do not have to apply for forgiveness. It is totally forgivable. So it will not be included in the payback it was totally a grant, so no payments.
Yeah, so it was an advance to the economic impact disaster loan. So they came up with that because the EIDL loan application process was taking so long. So they came up with this little advance. Now, not everyone got the full 10,000. Some got 2, some got 3, some got 5, but the max you could get was 10,000. So it's a completely forgivable, basically advance of money that the government put into effect for business owners.
But I thought the PPP application asked you that question if you got the grant or
Well,
something. So they
they-
don't have to worry about it.
No, we got the policy notice from the SBA that says that they are not to include it, because when you get your application, if you did get an EIDL loan, you are going to have to put the date that it was received and the SBA loan number that was granted to you. But I think it also has the amount, but you do not have, it does not have to be paid back. The only place where you're going to have issues is if you got a PPP loan and you got an EIDL loan and you use the EIDL loan for payroll purposes, we're going to have to pay that off with the PPP loan. So as long as you use that economic disaster recovery loan for other things and to run your operation, you're going to be okay. It's only if you double dipped that you're going to end
Well,
up
and
having
Tom,
to
I
pay
kind
it
of
back.
asked you this question earlier too, and it just kind of makes an interesting subject because let's say they already paid through, they spent through all of their PPP, but then maybe they went to their EIDL loan that just recently came about and was approved. Could they start using that now again for payroll?
I would say yes, because you're not going to, because now you're
Different
outside
time
of
periods, right?
you're outside of the covered period.
Okay.
Yeah.
I just think those are all good questions to ask.
The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.